So in this video I just want to walk you through a little bit of like in the price action and market trend, because most of you guys think you know it, but apparently you don't. As you can see, this one, both weekly and daily, are bullish, and how I identify it is just, if you're a beginner trying to draw on the candlestick chart and then drag it outside. Try to stop exactly at the bodies, not the wicks. Try to follow the chart, and wherever you think there is a so-called elbow, it's like the shape of our elbow. Wherever you find that, this is where the last push came, either to the upside or the downside. So this will define the shift of structure or the continuation of it. That it's very key, but that is up to everybody. As you can see, I count this one, others may not. Sorry, I didn't count this one, others may not. So this is how I do it. Not now anymore, now I have developed and have more experience, so I don't do that, but this is how I started. And this, as you can see, it is become recently bullish, because we were here like that, broke under the structure, and then became bullish again, and then the daily is what became recently bullish, because we were creating lower highs, lower lows, and then this was our lower high, this was our lower low, and we broke above it, as you can see, and now we are in both time frame bullish. Let's give you another example. I will give you something that popped up today, so you know. So this time frame on the weekly, here I need to change it, became bearish. So this time frame on the weekly, this pair, I'm sorry, on the weekly time frame, it is bearish. As you can see, I just drag it and draw it quickly. As you can see, lower high, lower low, lower high, lower low, and then nothing here has broken above or below. If nothing closes above that or below that, nothing changes. If price goes below that, then we have a continuation and we have a new lower high and lower low. If price then decides to go above, then we have a break of structure and we become bullish. But until that moment that either of those two happened, we remain bearish. So, and the daily was the one that was keeping us away from this pair, is recently, yesterday, with this candlestick, became bearish, because as you can see here, price was going up, high, higher low, higher high, higher low, not higher high, so higher low, higher high. In order for a higher low and higher high to count, is if the last push became of that. In this elbow here, this price didn't close above and didn't create a new higher high, so this cannot be a structure point. But that step here pushed the price higher and create a new higher high, then that is a higher low. And until this candlestick right here, you can just draw it with the box or however you want it, price didn't close above or below, so we were still remaining because we're talking only about the whole body, not the wicks. So the price was still remaining bullish until yesterday. That price closed below, and now we're again interested in this pair. So that was two simple examples of price action. I'm just giving you guys a tip to understand that you don't know how to read. Let me just show you one more, because I saw it recently with one of my friends. This chart right here, everyone will think, oh, it's clearly bullish. This chart right here, it is bearish. As you can see here, I'm drawing it to you. We were going bullish, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, and then push, break under the higher low, and then we are bearish, and nothing has broken above or below. Just because the price is going up now on the week, on the daily and the weekly, doesn't mean it is bearish. Market can do anything it wants, but our job as traders is to have an edge and a plan. So I wouldn't be able to be confident and take a long position here just because the latest price action goes up and the daily recently became bullish. I need my confluences. So my first and most important rule is price action and market trend.